From serving in the Marine Corps to managing over $60 million in real estate assets, it's Wayne Courreges III on the show today. And Wayne Courreges III knows how to turn discipline into dollars because he helps busy professionals escape the rat race and build lasting wealth. So we're here to talk about some of these amazing ideas, passive income, making it all work, real estate deals, building generational wealth, and so much more. So, Mr. Wayne, glad to see you. Glad to be speaking with you.
Hey, thanks for having me on, Robert. Look forward to hopefully adding some value to the audience.
Me as well. And so, the real estate, it's huge, it's exciting. Lots of people do it. Everyone has their own unique flavor. So what are you all about? What makes you unique? What makes you stand out?
Yeah, so I started my journey back when I was 19 years old. I was in the Marine Corps. I bought my first single family, 2-bed, 1-bath in 29 Palms, California, and really started there. So when I got out of the Marine Corps, I joined CBRE, a large commercial real estate company, was with them for about 16 years and did a lot of operational asset management, property management, really running the life cycle of these real estate investments for large institutional clients. And then in 2019, started CREI Partners, and we've grown that to about 60 million assets under management, which really is focused heavily on multifamily, 100 plus units. We've also niched in on storage, which is more not your typical mini storage, but more like the 20 by 50, larger warehouse space, not flex warehouse space, but people that need inventory space or their high-end RVs or boats. So we have that type of facility. And then we're also doing development as well with a ground up multifamily, a office, retail, and hotel. So that's what we've been doing. But I couldn't do this on my own. And most people don't. And whether you're, when you look at like large institutional or retail centers, offices, for a long time, I thought that, people, really wealthy people own those properties. But what really clicked, and it was crazy, like I was in the industry of commercial real estate and it didn't really dawn on me that it's actually syndicated. Most people either do through joint ventures or they pool their monies together with friends, family, and, other investors and through a syndication process. And there's many reasons for that to diversify, wealth. So you can actually spread your money over multiple properties. And then we really honed in heavily on passive income. And then we really focus with entrepreneurs because a lot of times they have a hard time. And I'm an entrepreneur myself where there's that consistent cash flow coming in. So what we've done is help entrepreneurs have that passive income where it's more of a consistent stream of income, diversifying away from Wall Street, not saying get away from Wall Street, by diversifying into hard assets, and then also seeing the tax benefits through depreciation that comes with real estate investing.
Wonderful. So many advantages and many reasons to pursue this. Even if you say, well, hey, I'm not a real estate investor. Someone like you says, hey, if you're an entrepreneur, you have your own business, well, you still should be considering parking your money in some of this because of all these advantages, benefits that it provides, the tax advantages, the passive income, the reliability. And you think about how there's people are always concerned about things like inflation, but you buy the land and it's this amount and this payment. It's like that's kind of your hedge against inflation, isn't it? So there's all these reasons to do it. And you know what I find really cool and interesting is like your path to success. You hear a lot about this kind of story of like someone's in the armed forces and then they're moving around. So they have like the VA loans, they get a good deal, but they also can't stay in one spot. So they end up just like accumulating all these properties and they kind of get bit by the real estate bug. And then they figure out the people they meet and what's out there, and then how to kind of specialize and figure out their jam, their groove. And so was that way for you? Because you mentioned about your path up, but like, why do I keep hearing this similar origin story about these military guys getting into real estate?
Yeah, so I joined the Marine Corps in 2003. We were, in the early stages of the war going on. So like it was a big draw to me to serve. A lot of service in the military with our family. So, for me, it was right out of high school. But, I could have gone to university and done other things, but the service was really important for me at that time and, still is. But I got the bug early. I was thinking about real estate in high school. I was exposed to people in real estate that were doing, developments and other real estate ventures that were growing their wealth. So I got the bug early. I just happened to go in the Marine Corps and keep that bug going and excited for it. You're absolutely right, though. I won't say a lot. I would say there is a percentage out there that have acquired properties along different duty stations and such. I didn't use the VA home loan for that investment property, but definitely is a resource for those who may want to use it. When I got out of the Marine Corps, I mentioned CBRE, and so again, it was always, for me, it was just my passion. I see a lot of military people do other entrepreneurial things, and that's really what I want to get across on this is like, unless you're in real estate, because I mean, this business, just like many other businesses, there's a lot of grit and a lot of pain and ups and downs and expertise that's needed. It's definitely not easy, and it's not for the faint of heart. Just like many other business ventures and such are not for the faint of heart. But what really gets people through that is a passion about what they're doing. And if you don't have a passion for real estate, that's okay. You just partner with people like myself or others who are doing this full time, all in on real estate investing. And you can partner with those people. They can do the heavy lift while you become a passive investor. And think of it like most people invest in the stock market, and those CEOs and those people at those companies and those stocks are buying a share of the business, but without having to do any work of the business. It's a similar mindset, but when you do invest in, say, multifamily, you're an owner in that multifamily asset. And so from that standpoint, a lot of your heavy lift of learning about real estate investing or the syndication or the business plan happens up front. But once you do invest, I mean, at that point, it's really heavily on the sponsor or the jockey on the horse to hit the business plan, provide the cash flow, give updates on the investments, et cetera. So a lot of the things from the military definitely do transfer over, the grit, the discipline, all those things, but doesn't mean everybody has that desire to do the real estate. But
Yeah, fair enough. But I'm also getting your lessons here about, well, if you want to accomplish great things, there will be that mix of like, sure, there's some things you enjoy, but some things you are sure a pain in the rear end, right? Because that's what being an adult is all about. And that's okay. You know it going in, and you also say, well, what's the goal? What's on the other side? What's my passion? What's my purpose? So that way it can carry you through. And of course, the point of life is not to be happy 100% of the time, but the point is to have something long term and to eventually be happy or have more happiness than non-happiness, isn't it? And then, so as far as it comes to the different types of real estate, right? And especially like multifamily, you hear about the multifamily guys saying, have the big apartment units, don't just rent a single house or a duplex. And so like, why is that? Why is kind of your style, your method superior to maybe what others might do in real estate?
there's different ways to slice a pie. Like, I'm not saying that like single family investing is worse off than like multifamily investing, but speaking from a passive investor, like those that are passively investing, they're able to scale their wealth faster. There's more depreciation. There's a lot, and that's in line with tax benefits. But if you think of it this way, like when I had that single family home in 29 Palms, it was about 4 or 5 months that I didn't have a renter in there. And that rent is all dependent on that one family or individual who rents that property. Whereas in the multifamily, your break even could be 70%. So 70%, or if it's a 100-unit property, 70 of the units need to be occupied for me to break even, and 30 could be vacant. Obviously, we don't want 30 vacant, but it just gives you an idea. Like, there's still income coming in, and so when you have the scale, it's it's like a 10x of returns with the same amount of headaches. If you think about, and I'm speaking to most of the investors on the show of like not becoming active. An active investor, it takes a lot of time. It takes money. It takes time. It takes partnerships existing. But if you're coming in and you're passively investing, your homework is really networking, listening to like this podcast, hopefully scheduling a call with us and building the relationship. But we're doing all the heavy lift of that work, executing on the business plan, finding deals, taking risk capital. A lot of times to put a property like this, I mean, it's 6-figure down payments, and there's risk there because if we don't close, that money's hard and we lose that money. A lot of people don't have the tolerance or, the capability of doing that. So there's not a right or wrong in real estate investing. There are people out there who, I was talking to someone earlier, their son finds land and, or does blast in northern Florida, does mailers to people who may be selling land. And then, they take that land and, either sell it to someone else who will pay higher bid for it, or maybe do some entitlements, do something different. So multifamily for me, from a risk standpoint, everybody needs a place to live. And, there's just not enough housing, especially in the Sun Belt where we live. Like there's just a lot of growth coming into Texas, Alabama, Louisiana, and these other states in the South. So, I just have stayed bullish. The last thing I'll say on this, not to be long-winded, but in my career at CBRE, I was heavily focused on office and retail. And I like office and retail. I'm in an office right now. Like I do like the idea of coming to the office. I think things can get done a lot more efficiently and more collaboratively when you're in the office. However, like if times are tough for any company, the first thing they're going to do is tell their employees to start working from home, and they're going to turn off the lights and the space becomes dark, right? I saw that many times during the ups and downs during the market cycles. People go work from home, but at the end of the day, people need a home. They need shelter. They're not going to move out of their home before they move out of their office. So from a risk standpoint, I like that as well as, people at the end of the day need a place to live.
And that's wonderful. And it's great to hear about those sort of real estate adventures that are possible and managing your risk. And that's still, low risk doesn't mean it has to be boring. It just means that you're being smarter about it. And I'm just sensing a recurring theme here of not doing everything yourself, of working with a team. That way more can be accomplished overall. And this other idea that, well, being just the same way that like being the boss of your business doesn't mean you don't do work. It might mean you do more work than the worker. It's just kind of different. It's shifted over to this different skill set, and similar to being an investor, right? Sure, other people are doing the work, so to speak. But as far as being an investor, there's still a lot that goes into it, isn't there? And you mentioned a lot here about like the people that you meet, and how do you know if the deals that are in front of you or the people that you surround yourself with, how do you know if you're like making good judgment? Do you have a criteria or like rules to live by when you're just trying to find these deals, find these people?
I love these questions, and thank you for asking. And we really didn't, for those listening, this is not a tee up to any, like we haven't had this type of conversation, but I get really passionate about it because a lot of people do. They see a webinar, they see a Facebook post, and they're like, oh, let me join in. The returns sound great. And they invest in a way blindly. They're not asking the right questions. They're not evaluating the deal, in a sophisticated way, or the team. And so one of the things that I've really worked hard on is educating investors, passive investors. And there's nothing more exciting than like people who know nothing about investing in real estate. And, they listen to podcasts. They start listening to this podcast alone, hopefully will trigger one or two people or more to go learn about real estate investing passively, or and looking at what they can do to network and build their network of people like myself who are actively doing this. But with that said, we have a passive investor coaching program. It's passiveinvestorcoaching.com. It's fully free. I did over 5 hours of content where we go in on how to analyze a deal, how to analyze a team, what questions to ask, what type of returns, structures, what are the very common things to look for. And so you're able to ask, questions through education. I mean, that's really the answer to all this, is that, and whether it's through my program, which is free and there's no like backdoor gimmicks, or there's nothing, it's just is what it is. It's me just providing value. There are conferences out there. There's meetups. We do a meetup the fourth Monday of every month. It's the Texas Multifamily Investor Meetup. It's virtual. We get people from all over the country that do that, that join in virtually. And we have speakers. I speak quite a bit on those, and it's all heavily education. Do not invest in a deal passively without having some form of education, even if they seem like a good guy. Like you have to be sophisticated. And it's a requirement by the Security Exchange Commission for people to invest in those type deals, right? Because it's all governed by the SEC. So, but I also would say too, Robert, it's like, let's not overthink this. Like every property that somebody were to invest in, whether it's active or passive, you're investing in a business. There's revenue, there's expenses, there's NOI. So when you're looking at a plan, I think first and foremost, do the assumptions that are being made seem reasonable? Is it in a good location? Like, is there growth in the area? If you go into Google Earth and you're looking around the property, so say you're in Dallas and you're looking at a property in San Antonio, you don't necessarily have to go to San Antonio. Just use Google Earth, do the street view. If you're looking and there's, a pawn shop nearby, or there's like barred up windows at the convenience store, like maybe that's not a good area. So like, don't overthink a lot of this stuff, but there's so much education, and I get really passionate about it because it's like, that is something that, if people are equipped with the education of asking the right things, they're going to choose better deals that perform, time and time again. The last thing I'll say too is ask for referrals. Like, I love giving, like, here's a number to an investor, they call them and they just get that comfort. Like, if sponsors and syndicators aren't willing to open the book a little bit to those referral conversations, those are some of the red flags that I see.
Very nice. I love your thinking outside the box in many ways, right? You're saying that it's important to get educated, and this whole idea of finding the partners, that is an education that can be had, right? Don't just wing it. Figure out, like, there's books on this sort of stuff, right? Like when you have a kid, what do? You read a book about it, right? You get educated, you figure out what do you know and what don't you know. That way you can just shortcut all these mistakes that the past generations and decades made before you. So you're saying get educated, but getting educated then leads you to not being a know-it-all, but knowing what questions you should ask. And then some of those questions should include about what referrals can you be sent to, and that way you can just even get more information. And so it seems like just a recurring theme in entrepreneurism and business ownership and investing is to be curious and to always be learning, and don't just assume you know everything, because then you'll be the bottleneck, and we don't want that. And so we're still talking here, but we're going to drop a link because you mentioned passiveinvestorcoaching.com. Is that right?
That's right.
Okay, so if you're still mid-listening, mid-conversation, go there and sign up and claim your seat to that free course, and click on the click to enroll button as we're talking, because it's so important for you to not miss this. It's so easy to like listen to a podcast, you click it off, you're like, oh wait, where was I? So while we're still listening, passiveinvestorcoaching.com. And as you know, Mr. Wayne, podcasts are great for stories, right? We hear about the struggle stories, the success stories. So what about your path, your journey is interesting to share? Was there a wrinkle? Was there some time of stress where you just didn't know how are you going to make this real estate journey work? Tell us about something that happened to you.
I mean, it happens every day. Like, there's like a gut punch here. There's a face like, I mean, there's always something, and that's part of the markets that we live in, right? And the great thing that we've been really focused on is cash flowing day one assets. We do not buy assets that require a huge deep value add. There's definitely that risk profile. So if you think about like this, like with stocks, there's the growth stocks, there's the value of stock. You depending on the risk that you're willing to give, you can invest in a startup and there's higher reward, but there's higher risk. And so what we're looking is straight up like, I'd say double base hit, maybe at the third base. The home runs are higher risk, right? And that's the 20% of our portfolio, which is more development, more speculative, higher risk, but there's higher returns. And so what we've been really focusing on is finding properties that have obviously, for us, fixed rate debt and maybe a loan assumption. We closed on a property that had a 3.82% fixed rate debt. The typical debt on multifamily today outside of agency is 6 to 6.5%. So getting a 3.82 just means there's more cash flow. Just think of business that after debt there's more cash flow to pay out investors. We've brought a property last month in June of 2025 where that property was bought $3 million less than the seller bought a year ago. And what happened was that lender called all the loans due on that seller. And so it put a position where they were doing a fire sale. And so those are the type of opportunities, just because we're really niched in with the brokers. We've got a lot of relationships. We have a team, it's not just me. There's multiple people on our team. We're able to pitch in, but real estate, I'll give you an example. Like we're doing a development and, I asked the broker today, the lender, what's our equity need? And they're showing on their books about 7 million. That's about $1.5 million more than what we anticipated. So that hurts the returns. It doesn't make sense to move forward. We'll work through that. So like I don't get stressed about it. Like tomorrow we'll, or when I get on a call, we'll dive into it because it is, a number that's pretty far off from what we were initially anticipating. But interest rates change, markets, lender appetite. There's so many things that goes on when it comes down to closing a property. That's the hardest part, closing a property. Once we close a property, operating and such, I would say that comes a little easier because if you've done a lot of your back end work up front and buying right, then, our team goes in asset management mode. And, that's for us, our comfort. We love operating, real estate. So
nice.
Anyway, my point is like, there's not really one, I mean, there's always things that come up and down. And I think entrepreneurs can relate. Like it's part of being a business owner. And what I find with our investors is most of them don't want to be real estate investors, or they want the benefits of real estate, but they don't want to quit their day job. They don't want to like get out of their, what they're doing. They want that cash flow. They want that depreciation, and they want the pride of ownership and to say they're diversified. They're not all on Wall Street. They don't have to worry about a tweet or a geopolitical battle or whatever. Like at the end of the day, like these are physical assets, really, cyber focus on, a location, and, people are living there, rents are due on the first. So, I think that's at the end of the day, what's most attractive about investing in real estate.
Yeah, I think so too. That it's solid. It's more reliable than some of those other alternatives, and there are many brains working on the problem. And you talk about these big numbers. Is there any amount of like stress management that goes into it? Do you ever get like so stressed out, or did you have to get a handle on your emotions in order to deal with these big numbers, these big swings sometimes?
Oh yeah, I've got a mindset coach. I've got a therapist. Like at the end of the day, like, yeah, mental, all that's really important. But that mindset coach was probably the best thing I did for my business. And if for those that, and I'm a straight up Marine, do not like to talk emotions, like it is, but when I go into my business mindset coach, oh man, and I've done that for about 2 years now. And, there's analogy, and I texted her, I have a call with her on Thursday tomorrow. And, I was like, man, there's just a lot of stuff going on. And she's like, well, let's get you back to Wi-Fi, Wayne. And what that means is like, if you're in your home, you've got Wi-Fi. Most people have Wi-Fi in their home. That's the strongest internet or the strongest thinking that you have. But as you start walking away, going down the street, your Wi-Fi gets less and less. You start getting distracted. When you're out away from your Wi-Fi, you shouldn't be making important decisions, right? As you get closer to Wi-Fi, and that's part of that mindset. There's a lot of mindset that goes in. So not only real estate, whatever business it's in, but that mindset of abundance and growth, and really categorizing risks differently sometimes, because every property is a different business. I had at one point was putting all those properties all in one bucket of risk, and working with that mindset coach of like, hey, let's really like extrapolate this. Like it's not all in one risk bucket. There are different risk buckets. And so anyway, yeah, that mindset piece is important. And, anybody that's dealing with other people's money, you've got to be clear-headed. It's not only other people's money, it's our money too. Like it's collectively, it's an investment. And so, yeah, it's important to be clear-minded and realize, like for me, like, hey, I'm not in Wi-Fi mode. I need to start, get in Wi-Fi mode so I can make the best decisions.
Oh yeah, accountability, right? It's accountability to yourself, to your therapist, to the people investing in you. Like if it's just you're stuck too much in your head, or your own in just this little pod, then it doesn't work out, right? And it's not clear, and it's not focused, and it's not disciplined. It's missing all these factors that we really want. And so once again, the solution is to involve other people in these various different aspects. And so we've been talking about all kinds of interesting ideas, haven't we, about real estate, about investing, about mindset. I want to make sure that we speak to the people that you want to talk to. So in this conversation we're having, we only have a few minutes left, but it's important to me that we cover what excites you, what interests you, and what those ideal listeners of yours want to know. So is there a missing, hidden, invisible question in our conversation? Is there something that I should be asking you, I just don't know to ask you?
Yeah, I think you've done a really great job as host to digging in on these different topics of passively real estate investing. I think, again, going back to when people think real estate investing, they think they have to do all the work. They have to go get the loan. They have to, find deal or find the property and negotiate and go through due diligence and then find the tenant or, go through the repairs and then eventually, over a few years later, sell the property. But that's just really not the case. Most of our investors don't want to be in real estate. They want to invest. They want the benefits of real estate investing, which, does, provide an extreme amount of wealth to investors. They want the tax benefits. And, that's, a big part of why entrepreneurs and business owners get into real estate investing as a way to diversify their wealth. But the big thing is like, when we go back to the education aspect of just thinking this as a business, think of like multifamily or storage or whatever that, parcel of land or whatever you're looking at buying, like what's the business plan? What's the value add? Where's the income? What's the assumptions are being made? Where are the expenses? Have they been verified, et cetera? Where are you getting the expenses? And just treating it like, everybody on this podcast they're sophisticated, they're educated people. It's why they're continuing to learn and get, more information. So they're hungry. Everybody on this listening is hungry to learn more, or they wouldn't be listening to a podcast. So it's not being overly complicated with real estate investing, but I'd love for people to join our passive investor coaching program, get into our sphere of, education. And then as we have opportunities, there'll be opportunities for people, one, to connect with us, but two, to see what type of investments may work for them. There are investors, Robert, that they want cash flow, right? There's other investors that want to see a higher equity multiple. They want to double their money every 3 to 4 years. So there's different risk, as I had mentioned, through the stocks. And so we try to provide those different opportunities and talk through the risk and how we're going to reduce the risk and, just have that type of dialogue and treat it more like a business plan to grow, that investor's wealth.
I like that a lot. You say, what's my path to success? How do I want to grow my wealth? Well, figure out the business plan to do that and say, well, here's my starting point. Here's my goal. Here's what I want to happen. And here's how we minimize risk through that process. It's just so cool to think about, right? It's been wonderful tapping into your mindset and getting into your train of thought. And so what are some next steps here? How does somebody know if they pass the prerequisites for being someone that should follow you? And if they are, where should they go?
Yes, I would say regardless if as I had mentioned, this is governed by the Security Exchange Commission. There are securities being sold, and so is the SEC. Whether you are an accredited investor or not, or don't know if you're an accredited or not, that's okay. Just go to the Passive Investor Coaching website and sign up for it and learn about what CREI Partners is doing and how to look at investments from a passive investor standpoint. It at least is enough to start the curiosity. And then there's local meetups. There's I'm not trying to sell people to invest with us. I'd love for people to invest with us, but ultimately I'm just really trying to gain exposure that there are other investments that people can invest with that are physical assets that don't have these huge fluctuations that actually provide, good consistent cash flow and tax depreciation that helps entrepreneurs. And you don't have to have the headache of real estate investing to benefit from everything that has to offer. So I would say the next steps, go to passiveinvestorcoaching.com. There you'll, be able to sign up for free. You'll get the link and, watch the videos. At that point too, you'll start getting our email updates. There'll be a Calendly link to schedule a call. And, myself and the team will, obviously want to nurture the relationship and never at any point make anyone feel like they have to rush to invest. It's the opportunity is going to be there, but what we really want to see is that people are making the best decision that's best for them.
Yes, 100%. So this is your future we're talking about, right? Figure out what's possible. And we've all been in so many situations where we closed the door on ourselves. We said, oh, I can't do that. I can't do real estate. I can't be a passive investor just because of these weird excuses, because of the limited thinking. So if you have previously just discounted yourself and you haven't even really looked into passive real estate investing much, and you said, well, here's this list of 17 and a half reasons why I can't do it. Well, why not get educated and figure out why that is? And, a lot of what you mentioned here, Wayne, it was like question based. Like there was some kind of list that you mentioned a few minutes ago where you're saying like, well, if we're looking into a deal, like here's this question, here's that question. And I'm just making a mental note that that's really powerful, right? Because like a bulleted list or a couple of keywords, that's really vague, but you say, hey, here's this question, and it's clear what you're asking, it's clear what the answer is, it's clear if the question has been answered. So ask these questions and be curious. And the very first step towards your education in real estate should be by going to passiveinvestorcoaching.com, where you will uncover strategies and techniques that will give you the tools to grow wealth and meet your goals by passively investing in real estate. You'll find out about the 3 types of income. You'll figure out how to evaluate opportunities, property, lifestyles, legal paperwork, all these things. And learning about it doesn't mean that you'll actually have to do it. You won't necessarily have to do all the hard work, but it's good to know what the process, what the steps are, what to look into, to know if it fits your lifestyle, your budget, your future plans. And then when you have these conversations with these potential partners, you know how to weed them out. You know how to sort them out. You're not just going in completely blind, because investing doesn't mean you're ignorant. You can know all these things, but still make some smart decisions. So we said that passiveinvestorcoaching.com is the place to go. It gives you the tools to evaluate whether real estate syndications are right for you, compare offerings, know your goals, so that way you can learn to analyze the deal structure, crunch the numbers, know if an offer is right for you. That's a great first step. You go there, you click on the click here to enroll button, and then you're off to the races. So passiveinvestorcoaching.com. But before I let you go here, Mr. Wayne, it's time for the scary part of the show where I try to stump you. I try to put you on the spot by asking about a fun or interesting quote or lesson that has served you in life or in business. So what do you have for a quote or lesson?
Yeah, what I always go to, and I tell my kids and I tell my team, but a goal without a deadline is only a dream. So, I mean, I've been very goal oriented, where I was telling one of my team members a couple of days ago, like around my birthday, I start getting silent because I start thinking about like what I want to do for the next year. Some people do that for their New Year's resolutions. Like for me, it's always around my birthday. I do that. And I put out the goals. I put deadlines to them. Sometimes I reach them. Sometimes I don't. I mean, it's life, and everyone can experience that. But, definitely having the mindset of like, okay, these are the goals, and then setting deadlines and working back. So that's always served me really well, as far as I can remember. So hopefully, people probably have heard that quote, but maybe just a good reminder to, set a deadline and work towards it.
Yes, I love that. A goal without a deadline is just a dream. It blew my mind, Mr. Wayne, a few years ago when I heard that only 3% of the population has written goals that they review regularly and act on. 3%. So if you want to be in that upper crust, then do those things that we've all heard about having written goals, but then we just toss that aside. It might as well be the New Year's resolution right there. So just write it down, act on it, review it, figure out a plan. And your first step to that is by going to Wayne Courreges III impressive site, passiveinvestorcoaching.com. Go ahead, do it right now. We'll see you there. And thanks, Mr. Wayne, for showing up, blowing our minds, educating us. I really appreciate what you brought to the table. So thank you.
Yeah, and really enjoyed it. Hope everybody's doing well, and hopefully connect soon.